I am usually and often flamboyantly wrong, but as we go into the fourth quarter, I've got my eye on a couple of things. One is rising inflation. Two are shortages of almost everything, including energy, which might add up to a very expensive winter. Rising rates across the board. And the supply chain mess that means you can't find what you want to buy. Michael, am I over-dramatizing the problems the economy and the markets may face?
No, I think you've got it. And all of us in this business are either, in that camp of having been humbled or about to be humbled. I mean, that's the life of an investor, Tyler. I've been flamboyantly wrong several times. But no, those are the issues. This inflation issue is a real issue. It's running hotter. And the supply chain. Chips could be out 2 years before automakers can get the chips that they need. So we do have wage inflation that is going up. It's just going up a little more slowly than price inflation, which means that the end consumer is losing purchasing power. You've also, and I think the one you forgot, Tyler, is this remarkably dysfunctional Congress. They're fighting within each party, and it is ugly in Washington, D.C., as a lifelong Washingtonian. These folks are so angry when they pass each other in the halls. I don't know how they're going to get anything done. But October 18th is a crucial date coming up for the government to continue to be able to be funded and not go into default. So with all of that in mind, investors have to try and squelch down that noise. And as they say in the fish market, ignore the screaming and yelling, pay attention to the price of fish.
All right, Ron and Sana, why don't you react to that? I know you've been writing a little bit about what you call panflation. How concerned are you about inflation and what it could do to the markets?
Well, Tyler, if you dial back to the pre-pandemic environment where the unemployment rate was 3.5%, inflation was still below the Fed's target. All of the supply disruptions, all of these price increases that we see, as far as I can tell, are not fully a function of monetary or fiscal policy. They are literally the result of the pandemic distorting the economy in ways we've not seen probably ever. I mean, when you look at 72 ships off the coast of Long Beach with 500,000 containers cumulatively sitting on board waiting to get unloaded, that's not a monetary or fiscal policy issue. When you look at the disruptions to the labor force, it has to do with the pandemic. So this panflation probably doesn't go away until we conquer the pandemic. And I think that is, a healthcare policy issue almost more than anything else. So I'm concerned that it lasts longer, as Jay Powell indicated earlier in the week. I just don't think that the typical tools that we would use to counter it, higher interest rates, tapering, or some sort of dial back in fiscal policy, would have any meaning until these other issues are resolved.